So in the last video, we saw that you need to make your balance sheet. We saw what is the balance sheet. Assets minus liabilities, net worth is your balance sheet. The other statements which we require, first one is a cash flow statement. A cash flow statement is slightly different from a balance sheet. It shows how much cash you got and how much cash went out, which means if you took a home loan of say 20 lakhs, that will come as your inflow, but that is not coming into your profit and loss account, or it is not your income, right? 20 lakhs is not your income, but it's your cash. Now, if you repaid 2 lakhs out of that in the year, then that will go as your cash outflow. So you need 3-4 statements. The first statement which we already saw is the balance sheet. The second one which you need is an income expenditure. Income expenditure obviously tells you what is the income that you have and what is the expenses that you have. It's a little funny, but income expenditure, when you know why we have a problem, because income would just be one line. It would just be salary. Right, and then on the other side you'll have all the expenses, and you realize why your income is not in your control because there's one item, and your expenses are not in your control because there are too many items. So right, so income expenditure account. So you have your balance sheet, you have your income expenditure account, and you have your cash flow. Please understand, when you're a couple and both of you are earning, don't make one balance sheet, one P&L and one cash flow. You need one for your husband, one for the wife, and then you combine the two. Why do you need separate ones? Because you should know that if the wife were to take a 3-year break, what is going to be the impact on the cash flow? Then very simple, your first cash flow doesn't, the second cash flow doesn't exist, the first cash flow exists. The husband is going to take a break to do some business, and for 2-3 years he is not going to earn. So what happens when the first cash flow goes away, the second cash flow comes into play. So you need to understand, will I, the husband, be able to take a 3-year break? Or will the wife be able to take a 3-year break to have a baby, because everything, the EMI, etc. have to be paid from one cash flow. So you need to create 6 documents, 3 for the husband, 3 for the wife, and then combine, so that is the family balance sheet, family cash flow, and the family income expenditure. All the 3 documents are important, all the 6 documents I should say, because you make 6 and then you combine them into 3. All of them are important, because then only you will know whether each one can take a break, for how long, and if you take a break, what will be the cash implication. Will I be able to pay the EMI even though I take a break? All those questions can be answered only when you have all the 6 statements, which means you have 6 statements and then you also have a combined one, so that you know how much of EMI you can afford if both of them are going to be working for the next 5 years. Let's say they're 22 years of age and they want to have a kid when they're 30, or they're 24 years of age and they want to have a kid when they're 32. So which means 8 years the cash flow is available, and the planning for not having a cash flow is only after the 8th year. So you may decide to take a car loan but not a home loan, right? So these kind of decisions, you need these 6 documents. I would say 3 plus 3, right, the cash flow, the income expenditure, and the balance sheet. They look somewhat similar, but they're not the same. Go to your financial planner with all these documents and with your goal statement, then financial planning becomes easy. Or do it yourself, but even for doing it yourself, you need all these documents. So which are the documents? Let's just summarize. You require first a goal statement, saying these are my goals, right? We will see how to create goals in the next episode. So goal statement, and where are you now? Where are you now is told to you by your balance sheet, and your income expenditure shows what you did in the last 1 year, and your cash flow shows what you did in the last 1 year. So balance sheet is as on a particular date. Income expenditure and cash flow are for a period. It could be for a month, it could be for a year. In this context, when we are talking of 1 year. So it will include your monthly salary, it will include your annual bonus, it will include it will include your dividend, it will include your rent, it will include your interest, right? All these things will be included. And normally, suppose your salary is 13 lakhs and you paid 1 lakh as income tax, what you have to do is to put 13 lakhs as your income and 1 lakh as your expenditure. Don't put 12 lakhs as your income. Make this so that you will know how much tax you're paying, right? You have mutual fund capital gains, you have other capital gains, so all that will come in your income expenditure, that will come also in your cash flow. However, if you repaid a loan, if you have taken a loan, those kind of things will not come in your income expenditure, it will come only in your cash flow. Suppose you sold an old car, that will come in your cash flow, and only the profit or loss from that will come into your income expenditure. That's a slight distinction that you have to make. Other than that, these three are simple documents, and you need all these three documents apart from your goal sheet to arrive at your financial plan. Thank you. If you like this, go to the bell icon, press the bell icon, like it, share it, tell your friends about it. We're coming out with a full series of goal-based investing, so you can see, you can do a binge watching later on after I put up all the videos. Thank you.